in light of new economic data, investors are keeping an eye on what the Federal Reserve might do next. Let's bring in Yahoo Finance's Jennifer Schonberger live in living color to discuss. Jennifer, we haven't heard from too many Fed officials since the latest inflation number showed further progress, but this morning, two officials notably are speaking out. What do they say?
Hey guys, good morning. It's so nice to be with you in studio here in New York in the new digs. Yeah, so as you mentioned, we're finally hearing from some officials this morning. San Francisco Fed President Mary Daly actually speaking right now in Frankfurt, Germany. She's warning that the Fed needs to move slowly to avoid a policy mistake. She's saying, quote, the perils of deciding too quickly are real. Declaring certainty too early is not just a missed forecast, it's a policy mistake. So the doves are probably going to take this to say that, hey, the Fed should probably be done at this point. However, knowing President Daly, she's probably saying, hey, we really need to keep our options open, but continue moving slowly, which is really what we heard from Fed Chair Powell just last week. Now, we also heard from Boston Fed President Susan Collins. She's giving more of an academic speech as it relates to the job market, though she says that measuring the job market with the official aggregate unemployment rate may not actually be accurate if there are changes in the labor force participation rate. Now, she says if more people are joining the labor force when the job market is tight because they're trying to meet higher demand for workers, then that may not actually put upward pressure on inflation and cause the Fed to raise rates higher. So maybe taking from that, even though it's theoretical, that the Fed doesn't need to do more here, I don't know.
Jen, how tough do you think this is, just towing that line, right? They want to sound positive. They want to reaffirm the fact that they do not think the economy is going to fall into recession, but they also are trying to not be too hawkish and spook the markets just a bit. From your interpretation, has the rhetoric at all significantly changed from what we've been hearing from policy officials more recent, or I guess over the last 2 or 3 months?
So I think they are really trying to toe that line, like you said. It's a very cautious walk here. Wall Street is really looking for them to say, hey, we've reached the peak. But Fed Chair Powell and many of these officials are trying to keep their options open, right? They have not taken rate hikes off the table, even though the markets are now pricing in rate cuts as soon as May. I think, though, that they're going to be here higher for longer. So I think that the thought that they're going to begin cutting in May may be a bit of a misnomer, because yes, you're seeing progress on the inflation front. You got that great CPI number last week coming after the PCE number, but you also still have a strong job market, and you still have a ways to go to get back to the 2% inflation number. Yes, the Fed's going to have to cut before they actually get to 2%. Otherwise, they will make a policy mistake, but we're not there yet.
Is there the belief that higher for longer can also equal soft landing as well?
I think it's possible if the job market remains strong. And to Colin's point, we don't see more inflationary pressures and people keep spending. But I think the key ingredient there is going to be productivity. And that's what Austin Goolsbee spoke to earlier this week. And that's what many economists have been telling me, that the only way to really describe an economy that remains strong, a job market that remains strong with inflation coming down, is productivity, which we really haven't seen come up in years. So that would be very welcome. At the same time, of course, you've got supply chain issues that are now finally being rebalanced. That's been part of this as well.
Just lather my OS with some AI and we'll have plenty of productivity here on set.